Join us for our weekly market wrap-up is Mark Wenzel from the Hopkins Group. G'day, Mark.
Michael, how are you today?
Good, thanks. Now, Lithium, the Star Entertainment Group, and the announcement of the US inflation figures have dominated and really moved the market attention this week.
Yeah, absolutely. Sort of starting with the mineral resources, we'll leave the US inflation to last, but starting with mineral resources, they indicated that they were considering spinning out their lithium assets into a separate company. This would mean that shareholders would receive a share in the lithium company and a share in the existing iron ore and mining services business. The shares shot up on the back of it. And again, over the last sort of 12, 24 months, this company's share price has increased significantly on the back of the outlook for the lithium sector. So one analyst even suggested that the value of the lithium assets would be the equivalent of what the whole business is worth today, highlighting what the analysts and the market think obviously of lithium assets, really around that decarbonisation, as we've talked about before, and lithium obviously is central in the cars and the electric car manufacturing business, and the lack of supply and the really high quality mine that Mineral Resource has it shows the strength of that company, and the share price shot up on the back of it.
Now, Star Entertainment haven't covered themselves in glory, bit of a gamble.
Big gamble, that's exactly right. I mean, again, it's the conduct out of Star has been highlighted in the Bell report, which is really appalling reading for New South Wales taxpayers. This is a company that's in a privileged position for to be having the license, being the only casino license in the state, and they've just made a hash of it, really. They had dealings with groups that they knew were backed by criminal networks. They've been ripping off the New South Wales taxpayer by not paying as much taxes as they should, and they've misled regulators, which is really appalling, obviously, from a company that's that in such a privileged position. The outcome of the assessment is not known at this stage, but if they're following a similar situation to what happened with Crown in Victoria, you've got a likelihood where they'll cop a big fine, a slap on the wrist, get some further oversight, but they'll still manage to keep their licence. So again, had a situation with Star where the share price actually went up on the back of the announcement, up about 4.5% on the day. But that was really because the market was factoring in sort of that worst case scenario, I suppose. But certainly, indicates that the management of Star, certainly let the taxpayers down.
Now, US inflation is the other one. We saw a big move in the market when they came in higher than what they were predicting.
Yes, absolutely. So that was yesterday, came out for Tuesday night, our time, and US inflation was higher than what people were expecting, and our market fell 2.5% on the day after a 4% fall in the US market. But sort of got to put that into perspective. It was really probably only a retracement of 2 weeks worth of gains here in Australia and a week in the US. So, I mean, the market had been strong leading into it, which is, again, got to put all of the investment horizons into perspective. But what that's sort of telling us, and what we've been talking about a lot, is there's pricing pressure coming through in all forms across the economy, whether that be in the US or here in Australia at the moment. And central banks are really making sure that they get on top of that inflation. Inflation, is that really hard to control, and once it's in the system, it's very difficult to get rid of. So they're really sort of focusing on eliminating inflation as much as possible. And what the market took from that signal about the higher inflation in the US was that they would have to stay high, the interest rates would have to stay high for a longer period of time. They were forecasting cuts in 2023 prior to the announcement on Tuesday, and that's likely to be that they're going to have to extend that period for, right through 2023 in order to make sure that inflation's brought back under control.
Right.
And what that means, I guess, for our unemployment is that, that their focus on keeping inflation down will mean that there's more unemployment, towards the end of next year, and certainly a lot more economic pain, I think, is what the market's indicating. So higher unemployment and higher prices throughout 2023.
How long do you think Australia will follow further up into the interest rates as well, Mark?
Yeah, so certainly we continue to see that. There are a little bit differences with the US. The US have a lot of fixed rates, so we've got a lot more variable rates. So the interest rate rises here have a bigger impact sooner than they do in the United States. So certainly we expect obviously further interest rate rises here, but not as much as the US. And you've seen that with the Australian dollar. Again, sort of that interest rate differential does have a big impact on what happens between the Australian and US dollar. And so obviously you've seen the dollar falling on the back of that increasing expectation that the US is going to have to raise rates further than what Australia is because of that, high proportion of mortgages on variable rates here in Australia.
Hopefully that dollar difference will help our tourism sector, which suffered.
Yeah, it certainly does, and it makes it less attractive for Aussies to go overseas. So perhaps they'll holiday at home more, and makes it more attractive for foreigners to travel here, which again is a good thing for the economy. But again, the demand and the demand for labour is the issue around tourism as well as hospitality. So again, always positives and negatives, but certainly it means hopefully more people do travel here and bring their money and spend it on holidays in Australia.
Great. All right. Mark Wenzel from the Hopkins Group. Thanks for the market wrap up, and we'll see you next week.
Terrific, Michael. Thank you.